I'm on the dollar yen, and I'm on the 4-hour chart. So now, if you've been following my recommendation to sell this thing, it was based upon the fact that on the weekly, you were up in this seriously congested area. I'll just call it, instead of doji, I always try to think of a new name for something, but this is the top inside the bottom. If you take that forward, you're right there, right? That's a pivot. And this is the floor. So where's the first you have to find the floor. Now this was the last step, was this baby rally. Pulls back, big rally, right? But really, where's it going? Well, it's just only going to sadly trap all the stop entry. If you're entering on a stop at the edge of a wick, this is dangerous stop entry territory, but although you could be right in the long run, like here, you could have got in right here and you'd say, well, this is the exception that proves the rule. I put a sell stop there and I made more money than Jesus. And that would have been tough for Jesus, right, I guess. It'd be a real thing. He'd probably give it all back. But here's also the bottom, right? Now, this is the true bottom that becomes the top, but this is why you have to put a bunch of orders in there, because you want to trade off this actual structure, which is these 1, 2, 3 top. Now, I mean 3 bottom that became the top, but if you look at this bottom, which if you included that in your trade plan where you had sell limits literally able to take punishment all the way to here, you have to have a big cush, a big giant pillow to make this many pips. Now, the guy that sent me the chart about the dollar yen, you can see where you had to get the F out, right? You had to get out here. You could have got out on something here. Actually, I would have conservatively bailed on the first touch of this top, right at the 100-yard line. I would have got out. Now, you left 100 pips on the table there, but if you didn't get out, you're down 150 pips off. I mean, you literally gave back 250 pips. Unless you get the precision. Now, this movement has nothing to do with a moving average. It's literally, when this market, it's like the opportunity, the void's been filled, and supposedly they say this is an old saw, nature abhors a vacuum. So where's the vacuum? It's not where's the price, where's the vacuum? Well, the vacuum was down there. Well, we filled that vacuum, and this is the lip of the cup. The sellers come in, but guess what? If this thing can hold this top, where everybody, there's a trend for people here. There's a trend for the long-term traders here, but they're completely contradictory. So which trend do you get on? Well, it depends how much money you got. If you got enough money to take a 150 pip swing, load the wagon on 300K. You put 300 tickets in there. You only get filled on 200. 200K long for, right? Some are cashing out at 10 pips, 20, you fill in the blank. So I'm going to repost this demo with the stop entry script, same as the limit drops. So the guy you'll never meet just wrote for stop entry people. He wrote the stop entry thing, which is literally going to get in like a true grid trade, buy stop, buy stop, buy stop. So or sell stop, sell stop. It lets the grid in like this, right? So when the market plunges down, you're getting up, but you have to have the ratios are going to trail each ticket too. So the way you set that up is critical. Whether you sell on a stop here when your take profit is here right now, it's set to like 40 to risk 15. Say so, as the market has to play that scenario out that's based on the fact that it's going to go down here and actually, or you can just, it's going to get you in. If you wake up in the morning, realize that you're a critical top bottom and like, oh yeah, like this is so stupid that, say this was the 4-hour chart, like, oh really, go figure it. It came up here during the news and went back. I mean, come on. That is the trade. I'm sorry, those were the ratios are 20 to 1. 20 to 1. How about 20 to 1 ratios? Come on. You got a 10 pip stop and you made 200 pips? That happens all the time. Now, can you get stopped out of a 10 pip stop if you don't put it in the right price level? Oh yeah, certainly. So we had the pullback today, and we just nicked the. But this is all about this talk about the euro. This is all about this dollar yen. And so the dollar yen trade, to me, that was over, and it was time to go long. Now, you had to switch on a dime there. You got to really be Bruce Jenner on this stuff. And no offense to Bruce Jenner, but you know, if you consider from this, if the stops are here, this is what a stop bot sees. That's all he sees. In fact, you could have sold on stops there and been up on that whole crush down. Okay. The rule is you put a stop here as it's crushing down, and maybe you tighten your stop, and maybe you don't extract all 300 pips out of that trade. But look at this entry, a 50 pip window. You put an order on every 10-yard line. Put a master stop here. Buy a 20K. I'm sorry, buy a 10K. Every 10 pips you buy. Big master stop. Cash out of something here. And let the other guys come out all the way to there. So right today, you'd be reversing for the scalp possibly. And then maybe it's going to do another scenario. Maybe it is time to put in this. Maybe this void here has been formed enough. Certainly, if you go to the, the smaller time frames, but you got a quick straw McGraw on the smaller time frames. So 4-hour chart, yeah. If you put buy stops last night like a goof, I mean, like you have no brain power. You just tell people, well, you know what? We're short. Let's put a trailing buy stop in. So it doesn't matter if you're in the market or not. It's what would you do right now if I put a gun to your head? And of course, based on ATRs, your stop's going to have to reflect that. So here's that infamous 50 pip window that didn't last too long, and a lot of people just scalped that and went home. You can see the total play for the 4-hour view. You buy new lows. You put a big fat order in here, but you only half fill it. You got a master stop. When it gets back to here, you're out of half your position. You let the other half go for another 50 pips. Here's your baby top bottom. Kind of got to be, that's pretty subtle. Trend lines break, come back, find support. You know, trend lines work because they're not working. They're not trying to, you have to manually draw them. I think this, I know it's the effort. Nobody wants to sit here and keep redrawing this stuff, but if you draw that trend line, you cannot tell me it's not touching that beautifully. And then we get the breakout, the pullback to it. If I draw that trend line on Wix, you can just see how garbage that is. Just like the people drawing, you're late. Come on, you're ridiculous. Who's drawing trend lines on Wix? Every book, well, okay, it's the volatility trend line. That's all I'll say about it. You can draw candles, but it's hard to find the top-bottom story on a candle. There's the wick breakout. We're breaking the trend line. But I'm looking at price-wise the scalp today. So this is a set it and forget it scalp. You could add sell limits here. You're up 20 pips. That's the no-brainer scalp of the day. Taking out that, and right here, the doji, big controversial zone. So tonight's plan is sell, 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 sell. Because as it comes up there, it's going to be a jagged, it's just going to be, this is a profound move. This is nothing but a short squeeze triggering. Every stop bot's triggered to here, trigger, trigger, trigger. So I sold into this. I scalped into that. I had to get out in the morning, but I sold into this as it comes up the wall of all those stops. But those stops would have been there whether or not that's how people behave. So just talking to this guy that programs cars, cars are running so electronic. He told me that the throttle was literally, the steering was even not even connected to a rack and pinion. It's connected to a damn, like it's reading the amount you're turning. Like a global, one of those garbage global, I don't know if anybody's tried to run any equipment that has a global infinity knob, but I mean, it's just ridiculous. That should be illegal. They should deregulate. They should just complicates stuff. It's scary. It's like, I cannot believe what's going on out there. So, yeah, just give me an old car. Not because I'm nostalgic, because I don't want like a 128 pin connector jumper, proprietary. Oh, that part's missing. Oh, you're stranded. Isn't that wonderful? You're stranded. Okay, so the market's backing off here. The scalp's playing out on this right now. So if I go to the 1 hour chart, I would be waiting for it to come back to this double top. But I don't know if you make it, so I'll just let it pull back. Anyways, this is a typical. Now you're up 30 pips on that, right? If you sold the very tippy top, that which I didn't get the exact price because I'm just still dialing this thing in. I'm going to put the stops on here for the stop people. But that takes, like, if you were right, if you put that sell stop grid in here, right here, see, you'd already, it really has to be a move that you have to have the patience for that to move. Because if you're getting in on the scalp where you're trying to make 13 pips with an 8 stop, or you put a 10 stop, you put a 14 stop, and now you need all these different stops and all these different profits because you don't know, and you don't want to know. It's like watching sausage being made. You don't want to know how you're making this money because it's typically against your normal intuition of, you know, what you should be doing. And, or no, in other words, I think it's a scenario. It's more than saying, I think it's going to go up. I think it's how's it going to get there? Are we done pulling back? Is there enough pent up demand because we've been going sideways too long? Or is it because it's pulling back so hard, so fast, we know that's not going to last? All fast moves are unsustainable. It's a honeymoon. It just doesn't last. You look at it, how many hammers, how many gravestones, how many gravestone candlestick patterns, or how many dragonflies you see, how many hammers, how many shaved candles you see. So it's pretty unique. And so we're back to the 100-yard line euro. So I'm buying that for the bounce. And yeah, I mean, it's going to be choppy now for that dollar yen. Of course, that's the end of the week, for God's sakes. It's over. So if you miss these moves, if you didn't get out of your short and ride it the other way, then you might be tortured over the next 3 weeks in the dollar yen. It's just going to go sideways and look like crap. Of course, it's not that it can't scalp it, right, in a smaller time frame. So it looks like it's done pulling back. I'm going to cash out. So that was it. That's all you get. I think this is going up. I think the euro dollar is going to smash down into this void. So at least that's the rest of the plan for the day, is that we're going to play bounces in this thing, in this void. Because if we fill this void tonight, or this is going to stabilize, and then I'm going to go down to the now keeping everything at the same scale so you can see how much you're trying to make per hour. To be a realistic view of when it's time to bail. Just because you can see the bigger picture doesn't mean it's not time to get the hell out. And realize that typically, if you think these markets are done moving, they're typically not. Only because it's not that they're not done moving. The market doesn't believe what you believe. So if you believe we're in some buy zone or sell zone, then the market likes to revisit that zone maybe 3 or 4 times. And if you know that, then it's you need to just dial into the breadth of that bounce, because you can make a lot of money riding the baby bounces. I mean, not a lot of money, but you can make money that's high probability because it's just kind of drifty. And then when you can see the big picture on when the volatility dies out, you're like, oh yeah. See, now right now they could drop the euro down. and you'd kind of like see the dollar to the yen go up. But yeah, so I cashed out of that, and I'm going to buy on pullbacks here, but they're already laid in, so I put in quite a bit of orders. Now, the thing about it is if you only trade one instrument, this is the big picture. You've come up into the floor, and you can trade off the daily. You never have to go down to the smaller time frames. It's not necessary because you can watch the market make new highs for the day as it unfolds. This is the whole picture, the whole complete picture. With there's no secret here what's going on. That's support. We bounced off it. We kind of crushed through, but we had to get to this this stop here. Once you nick that stop off of that daily chart, that was the most killer entry to go the other way. Now the contention is, are we going to come up into this? Are we going to, we broke that trend line, but we're going to hold out this trend line way out here. Of course, I wouldn't wait for this one to even get broken out. I'm just using that as what people are going to consider way in the future. But I just want to scalp the market, so I don't really care about that nonsense. So I'm going to sell all the way up in here tonight if we go up, and it just seems like a higher probability that we're going to keep on pushing, drifting north, than it is like this is going to turn around and just go down. Like it just looks like they want to take it up like 20, 30 pips here, and they want to crush the euro into the floor. So I scalped out of some of it, and if I'm wrong, I'll ride the drift. See, but this doesn't look like it's done tanking, and they're only 10 pips from crushing into this giant pool. So I'll put all my orders down here and pay attention to the targets need to be here, because if you slice through that doji, the buyers are supposed to come in right there at that doji. Here's where you build up your ice packs here, like put a 11 pip stop here to make 19 pips in a 2 pip range right on that, right there. Then I would canvas, say 20 pips for 8 hours with a 25 pip stop starting there. So you fill in that whole area. Yeah, broker went offline. So you fill in that whole area, and that's your the well you're going to dip into. Okay, it came in. So yeah, if you take it like this and grab the 2 by there's 3K in here actually, so it's quite a fat order, but if you could drop it right on the doji, okay, you don't have to draw trend lines. Trend lines are obsolete. Just put your orders where horizontally. So here you would have put your orders right on the this support level. So see the internal structure support and this top. So there's a 10 pip window right there. Now you have to have a wide enough stop to sustain that. So I put a 19 pip stop on that. If you put a 10 pip stop, you got chopped out. So you have to have a whole array. And you've even got a buy limit here that never got filled, the top inside the bottom. This is the top inside the bottom where they overshoot. So you're going to lose. Guaranteed you're going to lose. As soon as you pull the trigger, you're down on the trade. If you're buying at selling at the market. So you have to be good at losing. When this thing's in this phase right here, this is where they're just teasing it into this bottom here. Are we going to take this out? And this will definitely be the place I'll start buying tonight for a bounce, and it may not happen. May not go. That may stabilize right here. This is the top inside the bottom right now. You're sitting on the 4-hour chart with that. So the top, you're right there right now. You made your 10 pips, and you could have put orders based on these wicks right there. definitely a place to buy. Here's another place to buy. And it's completely hocus pocus. I mean, this top to this was supposed to hold, right? Tops become bottoms. It didn't. Then they trap them and they're like, uh-oh, but I mean, you really got to be, this is 4-hour chart, and you got to realize you got to buy these new lows. You have to buy low. That's how people, it's a buy low, sell high game. You can't get around that. So it's completely counterintuitive. I know you're afraid to put orders down here, but you have to. You just have to fill that up with buy limits. It could just stabilize here and then drift up to here, but everybody's got to get out here on the 4-hour. Anybody that wants to just bank it and be done. The market's telling you where to get out. Bottom becomes a top on the 4-hour. Bottom becomes a top. Anybody that is counter trend trading that has to bail here, and anybody that's trend trading, it's going to get on the boat train here. There's no magic. Anybody that put a buy limit here to get filled on this top bottom theory, don't forget the if you trade it verbatim, you know, the way it's spelled out, you're going to buy that. So what do you do when it gets back to here and you held through this whole down, right? You put a big enough stop in that you were willing to hold through that. You made money, but the people that are like, oh boy, they're getting out here because they realize, you know what, it's over. Or they're afraid it's over, so the crowd goes the other way. It's just a crowd, really. It's not like an institution. If you mean institution, you mean the crowd. They used to call it the crowd. I don't know what happened to this. It's almost like racism got into Forex trading. Well, that's the retail traders. And that's what happened to people's brains. So, it's just the crowd. It's the famous book, The Crowd. Or the Tulip Festival stuff. Come on, the tulip thing. I mean, that's a mind bender. The tulips were bid up that high, but it just reminds me of this. Like, this is the tulip trade right here. Obviously, right here is the tulip trade. I mean, you think that was going to last? Man, if you didn't get out of your long positions there, you are like going, wow. If you bought here and you rode that puppy to here, are you just asking yourself, wow? And then you try to buy this. This happens. This is such a volatile pair. Any pair is volatile, but you try to buy this top, and you, if your stop wasn't right, and this is why you see it turn there, because people did buy this doji and this saying, hey, you know what? This is the beginning of a giant channel. This is going to the moon. And it is going to the moon. But we have to come back and retest one more time. Then we go to the moon. This market retests more than a flunking, college kid. It's completely a mess. But that's to your advantage that it's screwed up. The fact that the market is chaotic is to your advantage if you're willing to put orders in Disneyland. So yeah, it may drift north here on this, but look, we got that 20 pips, and you are losing on that trade if you did not get out. If you're looking at the 5-minute world, this was your exit if you scalped that. So top become bottoms, but you can't have a 40 pip target on this stuff. You don't want to think that. You see the double top became a bottom on the 5? You're already out of the trade. You had to get out. Because the rule says you got to get out at the last known bottom. Oh, I know you want to make this much money, but that's not where we're at. There's not enough volatility at this point. So you take that money, and maybe you reload the gun here, but at some point it's going to decay and get all fizzly, and then it's just going to start dripping down, and unless you're willing to just make 4 pips now, right? So the party's over. It's really easy to give back all your money at this time of day. So this is the closing of the European session. So your last chance now, if you dumped one here and you're still holding one, definitely. But looks like we're going up here on this dollar yen here. But I think it's just higher probability scalping material. Now look how it tags the 50-yard line. Take your Fibonacci tools and get rid of them. You really think Fibonacci has anything to do with this market? It's outlandish. That's a crime. That's a mental crime. How much does the 100-yard line matter? And how much does this double top matter? Give up. Throw away your fib tools, man. It's just taking up brains. It's renting too much space in your head. It doesn't work. It's pointless. In fact, nobody's ever proven that it works. And I've never seen anybody go, well, you know, I put it here. They always say this. Well, it's close. Well, then why do you have it to 6.18? Right? It's like 61.8. Are you kidding me? Well, I saw some guy who, I rewrote the tool at... Dude, you could write it to random. It's been proven. If anybody goes like this, they go, hey, look at that. It's crazy. Look how that kind of matched up with that level. Hell, if I put a 2-pip grid in here, you'd say, oh, looky. There's a 5-pip grid in here. You mean I could trade the top bottom on the... Yeah, but your target's here. Be realistic. Now I'm getting all pissed off. Okay. I just can't stand it, man. It's a 618 club. You don't understand, man. Yeah, we've all been there. So, yeah, we've all had that. Look at some of these moves, man. Last night, I refused to trade this move, even though I could see it coming. I just thought I'd park all my scalps in the trailer park up here. So that's what I did on this demo. I just put orders in there. So, because I knew they'd play rope-a-dope in there. And I just had to cash out. Now, I should have gone long on stops here or baby limits, but there's not a problem. If you keep changing your target from, I'm going to look to make 50 pips, now I'm looking to make 100 pips, now I'm looking to make 20 pips, that's where it becomes unmanageable. Most people get like a fixed size and a fixed stop or a fixed size going. Fixed size doesn't work. Fixed stop doesn't work in these markets. Never would, never will. Especially if you're going to go trade the guppy, right? That's your goal in life, to trade the pound against the yen. And the idea that you're going to make 1,000 pips, yeah, with a 300 pip stop, you are going to make 1,000 pips. With a 50 pip stop, you're going to make 75 pips. But you're also going to blow out your 100 pip stop. If you can't see the hole. If you can't see the non-market, you're looking not at the prices, you're looking where the price hasn't been. That's my only suggestion is run a reverse chart. Take your chart and take it into a photo editor and then invert the polarity of it. And make it more, emphasize the lack of price. And I've got a line chart on there, which is the closing prices. Now, if you take that off and you just literally look where the market has been and where it hasn't been without any bias, because every time he's put up these candle charts, everything denotes this bullish, bearish stuff. It's inconsequential to a robot's view of the world, which you're supposed to trade like a robot, right? I mean, from the emotional standpoint. So why does it matter when the ATR, when the area of the market is vibrating in, is the most critical aspect of any trade plan? It has not. You cannot say, "Well, I'm running MACD." The market doesn't know that, and the ATR is going to be whether you ever can ride the bull. So if you have to put on a 25 pip stop, or you have to put a 100 pip stop because you can't babysit these markets, and you're like, oh, you can put a 100 pip stop with a 10 pip target. The ratio, if it's an outlandish, it's a higher probability execution to make 10 pips with a 100 pip stop than it is to make 100 pips with a 10 pip stop. Now, if you're only going to bet $10 on that trade, but you normally bet $50 on a trade, then obviously a 50 pip take profit with a 100 pip stop makes total sense, but you cannot use that on everything because now you've taken the size part of the equation up. I mean, size matters unless you're going to trade these one-trick pony trades that these guys do. Like, I see a Gartley, I'm like, oh, I see like 1,000 Gartleys. What am I going to do now? So, it's a professional a trading firm. In other words, I guess they call them institutions, right? But they have such a they're not sitting there just trading that. There's a billion people trading, right? They're scaling their risk. They're not too worried about whether they're right on the trade because they know the market's going to move. We all know the market will move. It won't move, and then it will move. And that's the one thing you're going to be certain of. Looking for certainty in a moving average, a Bollinger Band, fill in the blank, is unless you know what that indicator is doing and you have a trade plan for it, it's just going to you're just going to lose your mind. And you won't, you just won't get that mental skill of just being, if you want to make money when the market's dead like this, so after this big explosion, you're still going to have to wait another 2 hours if you're holding to make money. And if you're not in the market right now, you're going to probably have to wait 2 hours for the market to get to some sweet spot where everybody's going to go, oh boy, and, go the other way. So I'm making money in this trade right now, holding through this scalp. Now look at this 5-minute chart I was just on. Another thing is, if you just look at the daily, if you're only trying to make 30 pips off of this, you don't have to go to the 5-minute chart. I just went down there to show you what these 5-minute people are thinking. You're already up 30 pips on that. Now you could have put a 30 pip stop on that. Break even trading. They said they do it in Power Trading for $4,000 course on how to trade break even orders. Tops become bottoms. Like look for. Well, yeah. What's the other guys? What's the bear robot having for its protection? Well, we can't let it go too high. Like this. You got your buy limit here. Wow. Didn't even get a top bottom in time. There's your entry. You got a 30 pip stop on that to make how much? Come on, these setups are. You're looking for that setup. 1 month back. Look at this, right through the floor there. So that's where they blow you out. Yeah, you're gonna lose. You're gonna lose. It's not even. It's guaranteed. Look at where it comes to the next area. Right there. But now you got to have a trade plan that are going to accommodate that kind of move. So you need a huge inventory of trade plans and orders. And I see some guy gave me a thumbs down on my free MT4 platform. That's hysterical. But you'd expect that. You'd expect that, especially if I was charging for this, I probably wouldn't have included the FX Blue in there. But, the thing is that I wouldn't want to take the complaints from the, I don't want to be in charge of the complaint department. I guess it's worth it to never charge because you would cringe if people called you up and said, hey, what about the top bottom? You said that top bottom just got stopped out. I'm like, yeah, I know, but see how you would have got out there? Why you had to get out there? Because look at them pull back. Now you're buying. See, you're buying because they're stopping out, plus you're back here. But are you buying like 40 standard lots right now because you got a top bottom in the 5-minute? No, absolutely not. In fact, it could crush all the way back to here. I would buy whatever the market. So I only cashed out of half of the position. If it gets back here, I'm getting out. Oh yeah. In fact, I get out right now. if I got out right here, what do I care, right? Look at that. Who cares? You can't care because I can get right back in. Now I could trade the bounce. I'd be the bounce trader. 8 hours I'll put in here. I'll buy right here where everybody stops at. Buy right there. So now I could buy in stops. I'd put stop in right now. Now if I think it's really going up and I think I really missed out, I'd say for an hour I put a buy limit right there. But now I'm a scalper. Who cares? Here I buy like this. Now I start stacking these up. If you can trade a bunch of currency pairs, you can see where all the holes are. Once we fill these holes, party's over. So this party here, you fill that hole, you get in, you go long, and then you fill this hole and you go short, and you fill this hole. And this hole doesn't feel too good, but it doesn't fill at all. And then the harder it moves, the bigger the opportunities. So big smash down, time to really load up for the ride. Okay, I'm just saying. But yeah, that's dollar yen. That's my angry review of the dollar yen. That's for sure. So I'm going to rewrite this. But that's just dollar yen.